Good afternoon. Welcome to the Meltdown. Hope you've enjoyed your day. It's pretty outside. Of course, it's cold, but that's beside the point. Folks, this is that time where I really want people to take a few minutes and focus on your portfolio. Focus on the things that are important in your life. And ultimately, it's from that standpoint that we all want to make a statement. We all want to make good decisions. What I find to be very interesting is that in a market that is flat for the day, the Dow's down 27 points, relatively nothing. The NASDAQ is down 16, the S&P is down. These are all fractional adjustments down, but not so much that you would think the sky is falling. The yield on the 10-year Treasury is corrected a little bit. It's at 296. Gold's up $1.50. These are all flat trades, and it goes hand in hand with what's happening in Washington. Now, we've got a freeze. It's not going to affect the airline stocks that much. Yes, delays are up. 21,000 delayed flights over the last few weeks. It's not a big deal, unless, of course, you're on one of those planes or not on one of those planes. What matters to me is unemployment, the state of the economy. How Ben Bernanke and Janet Yellen have been communicating, talking about the amount of recovery that remains. Our recovery is an incomplete recovery at this point. That's, quote, per Mr. Bernanke back on Friday. Now, I'm looking at an 8-year tenure where we went through the hardest times that this country has been through, dating back to the Great Depression. We've had bigger depressions. We've had bigger problems. Today, we're at more leverage than we've ever been at. And so whether you look at bank stocks, one of the analysts I was listening to this morning talked about the London whale trade and how it went upside down and it cost JPMorgan a couple of $1 billion. Well, if you got 50 trades and 49 of them work and you hone in on the one bad trade, kind of makes you scratch your head and wonder about everything. Kind of like JPMorgan getting a slap on the wrist over the Madoff situation. They're going to pay a $2 billion fine. Everybody on Wall Street knew that Madoff was in a bigger juggling act than he could cover. That's what was said this morning. And I'm talking about guys that worked for E.F. Hutton or worked for Merrill Lynch, guys in the know. And JPMorgan had to know. Well, you turn your head when people are in their juggling act if they make ends meet. But the bottom line is that what is to be determined as a civil action or criminal action or interpreted by the SEC or the institution that was involved is how all of this plays out. Now, you would have to wonder, with the Federal Reserve talking about the balance sheet at $4 trillion in lieu of a $17+ trillion GAO. Now, the General Accounting Office, the GAO, is a government agency. The Federal Reserve is not. But the Fed claims that their balance sheet shows $4 trillion in assets. Those assets are paper. It is, quote, full faith and credit of the U.S. government, and the Federal Reserve is in the business of monetary supply. So they're going to finance their own situation. Small business owners would love the opportunity to be able to print their own money. It would make it easier to float. But the bottom line is that you've got to have something tangible somewhere along the way. Now, a few years back when broken gold was the norm, the gold exchange was the original gold buyer up in the northeast part of the city. We used to buy baggies full every few days. The volume has gone down so much that I'm lucky to be able to spend $500 in a day. And dealers are dropping out, guys that open their stores to just be in the industry. Some of the people who've dropped out of the industry never provided the proper paperwork to the local jurisdictions of city government. Whether the municipality is the city of Humble or the city of Houston, guys were in and out of business so fast they took the ride on the fad. Most have ended up losing money, filing bankruptcy. But the level of information and knowing who to go to, covering tracks for guys that are stealing other property, that happens, and it happens often. I can tell you firsthand that I know that it happens. Now, the bottom line is that in an economy that is very, very, very precarious, it will not take a lot for the recovery that we're waiting to see complete to fall back into a recession. Some have called it a double dip recession. Folks, rare coins do better in a double dip, in a long-term recession. Gold has had some banner years. Last year it was down 30% for the calendar year. That's a timing situation. And there were plenty of people who wanted to buy under 1,200. Problem is, it didn't stay there very long. And so by the time they got around to pulling the trigger, the market moved back up. That's why, as we sit here, and I told you I've seen $1,244 today, it's settled back down. We're around $1,240, but a high of almost $1,250. These are technical points that we look for in our industry. Platinum is up, palladium is up. The percentages, again, are fractional. In the case of palladium, up a little over 1%. Doesn't seem like a lot of money. I understand that. But when you talk about putting your money into a certificate of deposit, you may have many accounts. You might have them for your kids, your grandkids, your spouse. I've known people that put accounts together for their dogs, whether they're insured or not, and whether or not there's ever a concern of disclosure might be interesting. But the truth is that if everybody went and cashed their CDs at the same time, and of course they're striated, they mature over a period of time, if the banking system had to deal with that, the system would blow up. There's not enough money on hand. Just like I had a lady back in the 80s who had $6 million with a bank in North Carolina. And the bank's been gobbled up, long ago. But her comfort level, she was English, and she was married to a North Carolina apple grower. And her comfort came in the fact that she had $6 million in the bank. That's back at a time in the early 80s when 5.25% passbooks were the norm, and you could get it easily into a tax bracket here in this country of 50%. So over the course of a year, her 5.25 was gobbled up by inflation and taxes. So maybe she was making a couple of percentage points. On $6 million, she was getting $120,000. And ultimately, it was a great position to be in. She had lots of cash. And I showed her, through utilizing municipal bonds at the time, she could get 13% triple net gain. So for the couple of percentage points she was getting, she could make 6 times more money, $720,000. I wanted 1% of the portfolio, 60 grand. Now you would think to net over $500,000 tax-free, this woman would have jumped on it. They were general obligation bonds. It allowed her the flexibility of knowing that the bond that was floated, could have been a city or a state bond, was guaranteed by the municipality issuing it. There was very little to no downside. As a matter of fact, some of the bonds had call features to them, which meant that the municipality could pay them off early. Regardless, it was a profitable net of $500,000 a year. And the lady said no. She said no because she knew that she couldn't go down to the bank and go cash those bonds in and get her $6 million. Well, I tried to explain to her that she couldn't go to the bank that day, 30 years back, and go get her $6 million. The bank didn't have it. The bank would have to would have to have asked the Federal Reserve Bank, the local bank, to ship the money to be able to tender that check or stack the cash. Banks don't keep that kind of cash on hand. Now, I can tell you one of the banks that I dislike the most in the world is Chase. Don't like them, don't like anything that they really represent, and I've had my own situation with them in my business where they didn't want to cash a check for $60,000. They didn't want to put it in the form of a cashier's check, and they didn't want to stack the cash on the counter. Anyway, I digress. That was a couple of years back. If you own stock, if you have bonds, if you're in annuities, and you decide that you want to be liquid, you've got a 3-day to out as far as maybe 15-day delay. Depends on holidays and weekends, and there are cities around the country that shut down all operations. If you're not in an emergency, you can't be out on the road. That's today. But bottom line is that in a perfect world, in a 3 or a 4-day transaction, you're not liquid for days. I don't care if you've got IBM or any other company. Blue chip is what I really meant to say. I don't want to pick on IBM. Pick any company. Doesn't matter. Bank stocks, utilities. You sell the stock today, they've got days to settle with you. Your money's not there. You're not liquid. That's why you own physical gold and rare coins, because they are liquid. You can reach in the safe and take a piece of gold and go get some currency for it. Whether you go take their check and run to the bank and cash it, or whether they're paying you in greenbacks. Or if you're in another part of the world, gold is recognized everywhere. My love affair with rare coins goes to the fact that coins have been tendered around the world. They date back all the way back to Christ. But the truth is that whether they were struck in gold or silver or copper, they were means of barter. Widow mites go back thousands of years, and they're very inexpensive. They don't have any precious metal, but they were means of barter. So for me, when I talk about this kind of material, I'm talking about the kind of stuff that you can take, that you can go get currency with. There are people who will barter services for gold and silver. It's real money. And so in the overall hedge against government, against inflation, because folks, we don't have inflation in this country. I mean, let's face it, the price of oil went to almost $100 in the last week, and now we're back in the 90s, 93.50 for West Texas Intermediate. Now, look at Brent C crude, they're at 107, that's where it was this morning when I left my house. And so what I really want to explain is that unless you're sitting on an oil well, which doesn't do you any good because it's still got to be refined and transported, you still don't have cash, gold and silver and rare coins allow you the flexibility of being able to get liquid. The question is, how do you balance out the hedge? I believe the stock market's going to correct. I believe the S&P and the NASDAQ, I believe world markets will see a correction and a pullback in stocks as we know them. There are going to be stocks that go up. Back on the 18th of December, Michael and I were talking, and I put it out there that you could buy Bitcoin for under $600 a share. I think we closed on 12/18 at $538. Well, today we're back over 1,000. Did you sell the Bitcoin? Are you taking the profit? Are you managing your portfolio in such a fashion that you're trying to make money, preserve your capital, or maybe you need some losses? There's a lot of different ways to go about building a portfolio. And so for me, when I look at collectibles, all types of collectibles, doesn't matter to me whether it's a piece of art, a rare coin, a gun, a watch, any type of a collectible. One of the greatest collectibles that I've come in contact with, I have in the store. I've got an original Carson City mint bag. It contains silver dollars in it. It was discovered back when Richard Nixon was the president. And these were bags of original minted Carson City. There were New Orleans, and there were also Philadelphia minted coins in the original bags. And the bags at the time were destroyed as the coins were encapsulated. Nixon's administration gets credit for the very first slabs, or they housed the coins in a piece of plastic. Nice little presentation box with a certificate of authenticity. Those coins sold for between $30, $35 for the commons. A couple of the dates commanded a premium. And some of the dates there were no bags. The 93 Carson Cities, I don't think they've ever discovered one. But my point in bringing them up is that I've got a bag. I put in the original paperwork that the government used for auction. They wanted $35 for the commons. Just so happens the receipt I've got is for $30. The guy put in a bid offer, and I love the paperwork. There's a rare 1883 Carson City Morgan silver dollar. It's one of the nicest ones I've ever owned personally. Do I think it'd grade 66 or 67? Yeah, there's a big difference in value, but it's been placed in a nice frame. It's a beautiful presentation. You cannot pick up the phone and find Carson City mint bags. They just don't exist out there. Now, I can tell you that 10 years ago I probably paid $1,500 for it. I don't think I'd take much less than $10,000 for the bag and the coin and the framing. But it's beautiful and I love it. Now, the fact that it's on the wall doesn't bother me in the least. I think it's a great item. I love $20 gold pieces. Most collectivestors love big coins. And I can tell you that there is the simplicity of big, beautiful coins commanding a premium. There's a big sale at the end of January out in California. And part of the literature of the presentation is that it is estimated that the auction from just one company will command $25 million. It's a really great collection of coins. And there's multiple collections. And so when people come into the store and they've got different types of coins, I always suggest they get their hands on a red book. But it goes back to the most simple premise when you start to invest. Are you looking to protect your capital? Or are you looking to make money? Most people today really don't want to lose it. And so I listen and read and I get emails throughout the day about why you should buy XYZ or ABC or FGH. There's so many different companies, 3,500 of them in just the Dow. So with all of those companies and people moving billions and trillions of dollars around, what do? How do you make your headway? How do you protect yourself? Well, it's all a crapshoot. You know, you can have almost as much fun going to Vegas and throwing the dice or whatever your preference is. But for me, owning a rare coin that I can track the history of, it's the difference between being a guy who is hammering a telephone, trying to tell you why to buy something right now, and you being able to say, I want to do some due diligence. I want to track and see and touch and feel. And ultimately, if you do it yourself as a lay person and you don't have the experience or the knowledge to know what you're looking at, you're going to make mistakes. Now, some mistakes are okay. But just taking somebody else's advice who's not been in the industry very long, who's telling you, you look at the date, you look at the mint mark, you look at how the coin was graded, and that's the decision-making process, doesn't know what they're talking about. What they're trying to do is they're trying to capture your business from somebody who's probably shooting you more straight than most dealers are willing to admit. I know guys that buy coins at auction and turn them back out for 30 or 40 or 50% markups. I know other dealers that'll work on 1 to 5%. I've got a lot of friends and acquaintances in the business. There are a lot of people that I like that I would tell you in a heartbeat to do business with, because I never expect to get 100% of anybody's business. But to own a good-looking coin and paying a 15 or a 20% premium is nothing if the coin is worth it. I picked on the 1881S a couple of weeks ago. Last week it was the 82S. And again, you can buy an ugly looking Mint State 64 Morgan silver dollar and spend $80, $90. Or you can spend one that's got pedigree and color and spend anywhere from $2,000 to $7,000 on it. It doesn't mean that the $2,000 to $7,000 is a bad deal. And that's what you don't understand if you're talking to a guy who's just telling you someone's taking advantage of you. There's more to it, and you've got to understand all of the moving parts to make sure that what you're doing is sound. Now, I talked last week about a client who took a $450 bid value coin and took it to somebody who either was trying to take advantage of this couple or didn't know what he was talking about. In 2008, there were two different varieties of a silver American Eagle. The regular business strike coin, not polished up and shiny, quote, struck in proof. But one was 2008, the other one was a reverse of 2007. And the difference is in the U. In the reverse of 07, it's just loop-shaped. In the 2008, it had a little foot on it. And the difference is one was worth $26 and the other one worth $450. Well, the dealer, the client that I had, went and shopped the coin. And the guy said, 2008, that's $26. So he either knew what he was looking at and tried to take advantage of the client, or he didn't know what he was talking about, and the client all of a sudden gets perturbed. I illustrated it in the book. I illustrated it in the bid sheets. As a matter of fact, I went and looked online and I couldn't find one for much less than $650. So after the online fees, that dealer was still going to capture $590. My client was in almost 25% cheaper. I felt comfortable. I made money. The client was going to do well. Guy blew up, didn't understand all the particulars, and got confused. It's okay. It happens. So the bottom line to this is that when you build a portfolio of different types of coins, if you want to take the gamble and you just want to bet on what the precious metals markets are going to do, that's no problem. That's your prerogative. You get to do that. However, if you want to build a portion of your assets that you're going to look for value down the road, then you do it a different way. And there's a mix of coins. They don't all have to be third-party authenticated and graded. I talked about the 1950 proof set earlier this morning. There was a 51 proof set that was part of it, of the transaction. There's a lot of different things going on out there. And while I feel like gold may have downside, there's so much more upside in silver, and there's some great values out there. But you cannot arbitrarily shotgun the market thinking that you're going to figure it out just by what you can find online. That's why you pay dealers that have 25, 30, 40, 50 years of experience, who've looked at thousands of coins over the years. It's different than just being a nice guy who's 30 years old, who's been in the business for a couple of years, and he learned a script and he's making a presentation. I don't beat up those guys. They don't bring you the knowledge. Now, if they're honed in on a market and they recommend it and they eat, breathe, and sleep it, that's fine. But the bottom line is that there's material out there that's worth owning, and there's material that you probably shouldn't own. It all depends on what you're trying to accomplish. Anyway, there's inexpensive coins. I always talk about a portfolio in a third, a third, and a third. So whether you're going to move 5% of your net worth or 40% of your net worth, own coins that other people want, whether it's for barter, if you're out to the right, if you're to the left, you may be an elitist and you might have tens of millions to work with. There are people, there are companies, there are partnerships that are coming together that will share in profits of coins, and there are more people chasing expensive coins today than at any time. They will command huge premiums, and people will pay hundreds of thousands and millions of dollars to own them. The question is, are you working with somebody who will shoot you straight and represent you properly? Anyway, I'm going to get off the air. I'll be back tomorrow. But if you want to talk, give me a call at the store. It's 281-548-COIN. That's 2646. 281-548-2646. Option 0. That way you don't get trapped in the phone system. You can email me. That's Brett, B-R-E-T-T, at thegoldexchange.net. I would certainly encourage you to go to themeltdown.com. There are over 500 shows. We are getting close to 400 hours of audio, I know. I keep saying it. It's been a couple of weeks. Michael's going to hone in on how close I'm at getting. But folks, you can go listen to a show a year ago, 2 years ago. Heck, you can almost go back 3 years now and listen to a show, 40 minutes or so. All the commercials are taken out. You can hear the message. It's consistent. It is not gloom and doom. As a matter of fact, I got offered a coin today that I'd put out there for around $95,000. It's a $4 Stella. It's PCGS graded. Coin's got light wear. It is a coin that I remember. Gosh, it's probably been 6, 8, 10 years ago. I know there's a big difference between 6 and 10 years, where I sold one for about 40 grand. Folks, rare coins get rarer because more people are seeking them. And the bottom line is, it does have to do with what your goals and objectives are, what you've got to work with, what you want to accomplish. Bottom line is, ask questions. Look online. You're not going to get all the answers, and you need to be able to talk to somebody who's got some experience under their belt. Anyway, I never get off my podcasts without thanking Texas Children's Hospital, both the Ronald McDonald House and the Meyer Center. That's the Downs Clinic. Now, the Meyer Center deals with many disabilities. Autism and Downs are part of what they deal with. But folks, there are kids that have ASD and VSD repairs when they're born. And so those special care children all require help over the years, until they're in their mid to late teens anyway. And Texas Children's helps a lot of different specialties. Downs is important to me because of my son Jason, who's got mild Downs. I go annually with him and talk to Dr. Ostermeyer and her staff. The Ronald McDonald House at Texas Children's has 20 rooms on the 4th floor. And if you have the ability to provide a hot meal, somewhere between 20 and 40 on any given night, please call 832-824-8600. That's 832-824-8600. Nancy Allen and her staff would be more than happy to accommodate any questions and how things need to be delivered. If you're looking for someone to provide a tithe or a donation to, go to themeltdown.com. I've got 2 donation banners. I'm working on a couple of more, just trying to coordinate everything after the first of the year. But folks, I love the doctors, the nurses, and the staff at Texas Children's, throughout the medical center. I love all these special charities that help our kids. Anyway, we'll be back tomorrow. I'll be back probably between 7:30 and 8:30. Michael will get the show up early. I've got to go to the doctor kind of early, just my regular checkup. But if you've got questions, email me anytime. It's Brett, B-R-E-T-T, at thegoldexchange.net. I appreciate you listening in. We'll be back tomorrow. Have a great evening, and God bless you. Bye-bye.